Hello guys and welcome. Just let me get myself nice and settled straight into the camera. My name is Martin Jones and this, as you can see, is the LSBF TV, London School of Business and Finance Television. And as you can see, if I just roll back a little bit, I love AAT, which gives the clue as to what you and I are doing for the next 1 hour. We are doing AAT. And this is the level 3 studio, so I am doing level 3 with you, which means the intermediary financial reporting, I guess, is one way of saying it. So I've got the advanced bookkeeping waiting for me on the green screen behind this this brand reinforcement thing. So why not go mini-me and show you what I have. So there you go, you can see I've got advanced bookkeeping there, and just to make things a little easier for me, I've got reference to the time. And this is week 6, and therefore this is the presentation for week 6. It's not literally task 6, although it has been taken from a real examination paper. On my AAT, you will find that there are simulation papers available, and this is taken from simulation number 1. Simulation number 1 is now, it's a simulation, but when it was first examined, it was a real exam. It's the 2016 examination, and we are instructed by the AAT that not only is it a simulation, but also a real exam. Not only is it a real exam from 2016, but it's highly indicative of the kind of thing that you would expect to see in 2018, or indeed again in 2019, which is super news. And there's lots of other things I could say as well, but let's be careful. There's always the danger that I say too much at the beginning and then run out of time at the end. So let's have a little look at what we're going to do. The pen is over there actually, just let me bring it over here. There we go. Oh, nice. Okay, just bring that down. As you can see from the top, this task is about ledger accounting, including accruals and prepayments, and applying ethical principles. You are working on the accounting records of a business for the year ended this year. Actually, the date is very important for accruals and prepayments, so let's not just say the year end. Let's say the year end of the 31st of March 2007. In this tax you can ignore VAT, which certainly makes a big difference, makes it much easier for us. There's a basic business policy accounting for accruals and prepayments. An entry is made into the income or expense account, an opposite entry to the relevant asset or liability account. In the following period, this entry is reversed. Yeah, I'm not sure that's particularly useful, but there you go. It said some stuff about recognizing accruals and prepayments and then reversing the double entry. You are now looking at commission income for the year. Commission income of 2070 was accrued on the 31st of March 2006, which is the last year's year end. And frankly, that language is proper archaic. It really is. And I'll be very glad to have my cheat sheets in front of me, just to make sure that I feel comfortable about what I'm saying here, because the language that is being used here is really not natural language. It's quite challenging, and I want to have my cheat sheets in front of me just in case I just say something daft and then have to unwind it. Seems unlikely, but jumping from studio to studio is quite a stressful process. So let's make sure I've got everything here in front of me. So here's my cheat sheets, as you can see. So off we go. Let's talk about what we've just been told just there, because it is arcane. So we've got these businesses called sweet shops, and these businesses called sweet shops, when they sell sweets, they record a sale. And the usual word that's used for sales is sales. But not everybody sells sweets. Now, to be frank with you, anybody that does anything really tends to call their sales sales. But I guess some entities might use arcane language. And that's what this is. Commission income is sales. what kind of entity would use that language? Well, not many, frankly. I really had to rack my brains to come up with any plausible example of an entity that might call their sales commission income rather than sales. And I finally settled on an architect's office. You know, frankly, if I was an architect and I made, I produced plans for someone and they paid me for those plans, I would call that a sale. I'm not so different from a sweet shop. But it is possible that out there is somewhere out in the real world, or indeed in AAT land, there is a architect out there that calls their sales commission income. Fine, okay, if that's what you're going to call it. Now, on that basis, commission income was accrued. If you have an accrual for commission income, what that is saying is that you did some work for your customer and your customer hasn't paid you yet. So a commission income accrual is just a receivable. And, frankly, anyone these days working in bookkeeping, in financial reporting, would call that receivable a receivable. You wouldn't call it an accrual, but what can I do? It's been called what it's called. Have I said that right? I have indeed said that right. And like I see, it's very handy like you can see, it's very handy for me to have this reinforcement of this strange language here in my little scrappy, my little cheat notes here on the left-hand side. The first bit's really easy, but I tell you what, it almost doesn't matter this because it's only 2 marks. It's 1 for the first and 1 for the second. And then there's 3 marks there and there's 3 marks here. And most of the marks are over the page. So it doesn't really matter if you get this one double entry thing wrong. That sounds very negative, doesn't it? I'm sorry I said that starting out. But I just thought I'd point out that, you are under pressure in the examination when you're trying to do your advanced bookkeeping. You do have a time limit. And if you can't do something instantly, then what I would do personally, what I would suggest is just write down the answer that you think is right. Respond using the computer as to what you think is right, but make a little note to come back to it just to reassess it. You're going to be fine with this. The reversal of the accrual is dated on the first day of the new year. So that's the 1st of April 2006, the day after the accrual. So the accrual is on let's have some colour here. What should we go for? Boring green. So the accrual is on the 31st of March 2006. So we want the following day here. Not because there is anything special about the reversal, just because that's how all brought down balances are brought down and then cleared and moved around, and it's how the opening entries are always treated in any story. Okay, enough said. The reversal is on the credit side of the commission income account, or on the debit side of the commission income account. Now, the correct answer is it's on the debit side, and it is pretty tricky to get that. Or maybe it's not, maybe you find it really easy, I don't know. I find it really awkward. It's doing my head in just thinking about it. Thinking about it. First of all, the commission income account. This commission income account is the P&L sales, is the first thing to say. So this is the sales in the P&L. Oh, I tell you what, I was so neat next door, but I think that was the quality of the pen. The pen's not quite so nice in this room. Oh gosh, that looks really spidery, doesn't it? I think it's this pen. So that's the sales in the P&L. Oh, sorry, sales in the P&L. And I'll give that little quote as a translation of that. The sales in the P&L are credit balances. And what has happened is that we have recorded the sales for this last year. You are looking at the commission income for the year. Commission income of 2070 was accrued last year, which means recognised last year. So we need to have an opening debit balance to prevent double accounting for the commission sales. So we need an opening debit balance to prevent double counting. Last year's sales. And there you go. I mean, that is one way of working your system. And there's more things that I could say, but I've got to be careful, you know, this is only one mark and I've already spent 5 minutes on it. So I better move on to the rest of the question and come back to this if I feel it's appropriate at the end. So there you go. What I'm doing is I am debiting the P&L T account so that when the sale comes through next year, that sale has a debit balance that will go up against the credit balance to prevent the double accounting for the last year's sale. That's the idea that this system is using. Not the way I would do things, but there you go, it is the way that's being done in this system. That looks a bit weird. The cash book for the year shows receipts for the commission income of 42,805, commission of 1960 for the month ended. The current year end was received into the bank on the 15th of April 2007. So what's happening is they're recording commission income, they're recording sales on a cash flow basis. So because they're recording sales on a cash flow basis, they think that the work that they have done for the year is a sales balance of 42,805. So because the cash received is 42,805, they are in danger of recognizing sales of 42,805, which wouldn't be the end of the world, to be honest with you, because it's only a little business. But that 42,805 includes last year's receivable. So we're receiving last year's receivable this year. And of course, last year's receivable was recognized as a sale this year. So to prevent double accounting, we've got this debit balance that we talked about earlier. So last year's receivable, which is in the 42,805, we need to pull it out of the sales, otherwise we'll end up accounting for the sale in the year that we deliver the goods, and we'll end up recording the same sale in the year that we receive the cash. We'll record the same sale twice, once when we deliver the goods and once when we receive the cash. So 2070, it's got a sausage around it. But as you can see, no you can't see because I've just chopped it off. As you can see, the similar thing happened in March this year as to happened in March last year. which was that we did some work in March but got paid in April. And obviously the work that we did in March, we did it in March, which is this year. And you recognise work sales when you do the work, not when you get the cash. Okay, so this year's receivable needs to go into the sales. This year's receivable needs to go into the sales. And this year's receivable is 1960. And checking out D, taking into account all the information you have, calculate the commission income for the year, otherwise known as the sales. So the sales is the sum of those three numbers there. Just looking around for a calculator, but the only calculator I've got is my iPhone. So we've got, what we should do, start with minus sign. I feel like doing minus. Minus 2070 plus 42805 plus 1960 equals 42695. It says in my calculator. I'm now going to check my cheat notes. 42695. That's encouraging. 42695, and therefore obviously we stick 42695 into the box. Yeah, that'll do me. Carrying on. Your junior colleague asks why you are considering the receipt dated the 15th of April. She is confused as to the financial year ended 31st of March. Okay, well, we can explain it to her. Tell you what, before we actually have a look at the choices that we have here, the reason we're recognising this year's sales this year is because this year's sale is this year. That's it. So when do you recognise sales? You recognise sales when they take place. In the case of goods, you recognise goods when they're delivered. In the case of services, you recognise services when they're delivered. And when you do a service for someone and you deliver the service, but they haven't paid yet, it results in a receivable. But you still recognise the service at the point that you do the service. You still recognise the sale of the goods at the point that you transfer the goods to the other guy. And it's a basic concept in financial reporting. It's got a name. The concept is called accruals, and it results in accruals. Accruals and prepayments like payables and receivables, like trade payables and trade receivables. So, it's is it a she? She, who am I? I must be the junior boss, so I'm the semi-senior. My junior asks me, why do you recognise this year's sales this year? I recognise this year's sales this year because this year's sales happened this year. That's why I do it. You recognise sales at the point that you deliver the goods and not at the point that you receive the cash. I can also tell her that there is something that records the cash when the cash flows, and that's called the cash flow statement. So in the cash flow statement, the cash received from customers would be on the basis of the cash flow. So there is a statement that works on the basis of cash flows. However, that statement is not this statement. This statement is a statement called the P&L. At the top of the P&L, you've got revenue. Revenue recognises sales, and we recognise sales when they happen, not when we get the cash. That's the idea. That's all it is. But we don't have that as a choice, as you find out as you work your way down. And it's a bit uncomfortable to go for what we go for, but here we go for. Can I just go for what is acceptable? The reason we recognise the sale as a sale this year is because it's a current asset at the year end, I suppose. It isn't the way I would say it, but I suppose the double entry for recognising a sale is debit receivables and credit sales. And in this case, we're talking about the balance of 1960. And the reason I recognise the sale is because we've made a sale. All right. The reason we recognise a sale is because we made a sale. But you could say, although it would be clumsy, you could say the reason we recognise a sale is because we have a receivable. It isn't what I would say, but it's the best of a bad bunch here, because the others are definitely not acceptable. The proprietor of the business asked you to increase the profit. No, that's not why we did it. It's got nothing to do with that. So we do something a bit weird here. We tick that it's not acceptable. That is how those electronic boxes worked in this exam when it was examined. The transaction is an expense. It's got nothing to do with expenses. It's a sale. So there you go. There you go. So not a great choice, this bottom one here, but it's the best of a bad lot. Okay, so what am I going to say now? I have no idea actually. So what I'll do is I'll go back. I was going to say more about this one, but there isn't anything more to say, is there? Or shall we do a bit of ethics? A bit of ethics. Should we do that? I was going to go back, but as you can tell from my my stuttering about this earlier, I'm not particularly keen to go back to that fella there. And I think I can give you more useful value if I explore number one first. The proprietor of the business has asked you to increase the profit for the year. We're not doing it because they might have done that, but we're not doing it for that reason. Now what I want to do is I want to expand on that a little more. So what I'll do is I'll just add an extra page off the bottom. Here we go. So I'm just adding a little bit of page, so just so I can push this up and I can give myself a bit of space. And I'm just going to give it a little bit of pico is what I'm going to do. I fancy a bit of pico here. So we have pico. We do get professional marks for ethical consideration in AVBK. So let me show you this mnemonic which I have been using in order to answer this question. I'll tell you what, that's a squeeze. Profession. I'm just going to give myself a bit more space. Can I get rid of that? Professionalism is a big word. So I think I'll start it over here. Over here. Give yourself loads of space. Professionalism. There we go. God, it is a long word, isn't it? Integrity. Competence. Confidentiality. And objectivity. In my head, I'm having loads of fun with this. So this question has not asked us to further explore this naughtiness highlighted in pink. This question has not asked us to explore the proprietor's ethics, but other questions do, and I want to do this because I think it's useful to you, because other questions do. So what I'm going to assume is that what we're being told here is the proprietor of the business really has asked us to increase the profit for the year. So I'm an accountant, I am the accountant, I'm the bookkeeper, I'm the accountant, and I have been asked to push up the profit. And I'm going to criticize my boss's ethics by using the pico you see there. And I think it's best if we start with ICO and then come back to professionalism. Professionalism particularly applies to me and less to him. So integrity. Integrity is all about honesty. He's trying to push up the profit because he wants to push up the profit, not because he wants to show a true and fair view. If he's not interested in a true and fair view, he's interested in lying. If he's interested in lying, he has problems with his integrity. So I'm going to give him a against that. I'm going to give him a red cross. If he is doing what he's doing, there are problems with his integrity. It is possible that he fully understands financial reporting and he's just a scumbag and he wants to manipulate the FS. But somehow the way the question reads, it sounds like he doesn't really understand sales and how they're recognised, because he doesn't have to try and persuade us to recognise this sale. We're recognising this sale because we made a sale. So it sounds like he has a lack of competence as well. So there is weakness with his competence. Now, I tell you what, that is really, really awkward. But really, according to the AAT, we don't go home and blab to the wife about this when we get home. No, that's a breach of confidentiality. Tricky, you do not go and blab to the husband and moan about your boss's lack of integrity, because that would be a breach of confidentiality. So we've got to be careful with that. And then we don't really know why he's trying to push the profit up. It's usual that sole traders want to push the profit down so that they can improve on their tax position. But this one appears to be trying to push the profit up. So that would be a breach of objectivity. Now, say, for example, he might be trying to sell the business. If he's trying to sell the business, that would be why he's trying to lie, and that would be a breach of objectivity. And if we fall in with his lying, then that would be a breach of our professionalism. So there we go. I just thought I'd talk that through with you. All right. Thanks very much for listening to my little story on Pico and how to use that. Now I'm going to go big me and just get you ready for the next session. Oh, straighten myself up in the camera. So that was me talking about advanced bookkeeping, adding in a little bit of ethics for fun at the end there. I'm going to take a very short break and then I will see you in just a moment to continue level 3. See you very soon.